Welcome to the WealthGenius podcast, brought to you by the Expand Wealth Real Estate Fund. Expand your wealth by investing in apartment buildings. Go to expandwealthfund.com to book your info session. The WealthGenius podcast, strategies for multifamily real estate investing, mindset, community, success. The WealthGenius podcast with your host, the godfather of real estate, Alfonso Cuadra, who has expansive experience in business and massive success as a real estate investor. The WealthGenius podcast. Let's dive into today's episode.
We're old friends. We've met in past lives.
That's right.
And, I remember before COVID, you came to a few of my events and, there was, and we went out for dinner that one time to that Indian restaurant. And we just, we had a great time. And then COVID happened, and then kind of like a lot of people just kind of like did their own thing. And then recently we have come together again.
Yep.
And I'm so happy. Denise and Stuart, thank you for coming on the show. I wanted you guys here because I feel that you guys are so interesting. I love the things that you're doing, and you guys are firecrackers. And you're young, and there's a lot of stuff still to come. But some people could be inspired by the amount of things that you do. And so, I want to start at the very beginning. Like, how did all this start, and what's going on over here?
Well, Denise and I first met in the early 90s. We had each gone through a divorce, and we got together.
Well, that decimated our finances, right? I mean, that's one thing we've got to add in there.
And so we were taking a look at just what we could do in order to support our retirement and rebuild our finances. And it was funny because
that was forward thinking, because the 90s, 90? That's like 40 years ago.
Well,
oh no, hold on,
30 years.
Well,
30 years ago.
We met in the late 1990s.
Okay.
We were, yeah.
But I mean, the big thing was that we knew we were going to have to do something other than what we were doing at the time.
Yeah.
And we started taking a look around. We looked at various opportunities. And it was really funny because we went to a trade show, and someone there was selling real estate investment as they had a franchise, and they were selling the courses. And I took a look, and I said to Denise, no, that's not for me. I don't want to deal with tenants and toilets in the middle of the night. Well, fast forward to 2010, and Denise and I were both working for the federal government at the time. And Denise had grown up in an entrepreneurial family. I grew up, my father was military, my mother was a nurse, so I was sort of used to the 9 to 5. But Denise's family was entrepreneurial, and she really wanted to do something. And she fell ill. She was off work for quite a period of time. And when she went back to work for the one day, she came home and she said, I don't want to do this anymore. I said, good, quit. We had spent some time trying to live off just my salary in case, because I knew that she was unhappy at work. And so we found that we could live off my salary. So I said, quit.
Yeah, most people don't do that, right? But we lived on one salary. We were living on 2 salaries, and we thought, we could do this. Sure enough.
And so what, it's more of a expense, like you got to cut your expenses or whatnot, or because you go from 2 salaries to 1.
Yeah, but to be fair, I had a very good position in the government. I was an executive. And so I had a salary alone that was better than the average Canadian. And so we just watched our dollars. We didn't waste money. And we lived frugally, and we were able to put aside Denise's salary. So
and
that
at the time, it was still just grazing $100K that I was making, and we banked that. We didn't touch it at all. We banked it. So
in January of 2010, Denise left the federal government, and we knew that we were going to do something. And by the fall before, I had softened, and I thought, well, maybe real estate is worthwhile investigating. So we were taking courses. Now we had learned a hard lesson back in the dot-com boom, the dot-com bust, because we invested in stocks without having a clue what we were doing. And it cost us significantly.
We lost everything except for $18.34. So we're talking multiple 10,
So all that money you banked?
No.
Okay.
We did a portion of that. That money
Okay.
was still there.
Okay.
The money was still there. But what we did was educated ourselves. We thought, if we're going to do real estate, let's get educated first. So before I retired, which was January 29th, 2010, we educated ourselves. So when we retired, the day after I started running in real estate.
And making offers and making offers and making offers. And one of the first things that happened, we ended up buying a house. And they always say the first house that you buy as a real estate investor, buy something close to home and don't do major work. So we bought a property 5 hours away from us that had to be fully renovated.
And we added a secondary
Are you guys
suite and
renovation
everything.
people or?
We've done all sorts of strategies. We've done renovations, we've done fix and flip, we've done BRRRR.
We've done wholesale, we've done multifamily.
But does it come natural? Like, are you
multifamily.
handy people?
Oh, no, we hire people for that.
Okay.
Yeah.
Denise's family are contractors. So there are
I'm
times
from a
that
family of painters and contractors, so many, many times I call family, I said, I need this done. So people say, who's done your renovations? And I said, they want the name, right? You know what it is, how investors want, your contractors and everything. I said, well, if you were to hire them, you got to put them up, buy their beer, and they go, what? Because
when family comes in, they stay with us.
Yeah,
and
they live
we
5
make
hours
sure the
away,
beer
and they
fridge
would
is
come and
full.
live with us, and we'd put them up, feed them, buy their beer, and they would just do the work.
Cool.
And we've had beautiful stuff done over the years.
And
but-
to be fair, they did charge us. They had to invoice us.
oh yeah, no, that's,
If anybody from Revenue Canada is listening, yes, they did charge it. They charged us the GST, the HST.
Yeah.
But we ended up taking a look at what we had in retirement funds. We had RRSPs, and TFSAs hadn't been created yet. So all of our money was in RRSPs, and it was invested in mutual funds. And it was just getting really poor returns. And when Denise left the government in those years, they paid a severance. And so they said to us, do you want it in registered funds or do you want it in cash? And we said, well, shoot, our registered funds are doing so bad. We'll take it in cash. And they said, good, here's the income tax hit. We said, good, we'll take it in registered funds, please. And we went looking for some way to use that. And Denise was at a conference with a bunch of real estate investors, and she heard someone say the words RRSP mortgage.
nobody else heard. And it was like we were just a group of 3 or 4 people
Ding, ding,
talking
ding,
together.
ding, 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 ding.
And I thought, I got to find out what this is. So the very first thing we ever did in real estate was actually do a private mortgage. We lent my money that I got from my severance from the federal government, and I actually put it on a 3-year rent to own. That's the first thing. And then the light bulb went on. Excuse me, those are borrowers. Why can't we be borrowers? And that's how you know us as well.
Yes.
As we turned the tables, and that's how we grew an 8-figure portfolio, is by using other people's registered funds legally, ethically, knowing how to do it properly, because I see the stuff out there and I just shake my head.
Well, some of those cowboys that are out there is what created the tightening of all the rules.
Yes.
Exactly.
Yes.
And I mean, the big thing is with us, we were seeing such poor returns following the advice that comes from the banks, buy our mutual funds, buy our GICs, that we wanted to help other people. And we knew that we could give them a good, solid, predictable return using our real estate investments. So that's where we started to reach out. Denise
And you started educating people on this.
Absolutely.
Exactly. But it took us a few years. Like, we've done multi-millions of dollars in mortgages. Like I said, we've got 8 figures worth, right? Of that, a good solid 8 figures. So we have become such an expert because we've been teaching people across Canada exactly what we did to get us where we are. And it's nice to see, because I still remember, you'd know the person, I'm not going to mention the name, but this person had called me before the very first time we offered the course, and she says, oh, this is so great that you guys are offering this as a course to help people, but I already lend and borrow, so, I'm good. This is wonderful.
There's nothing else for me to learn.
Exactly. Until I said, isn't that great that you don't have to pay mortgage fees? They go, what?
Ding, 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 ding.
And she said, I just paid $5,000 to my broker. You mean to say I wouldn't have had to pay that? And I said, that's right. She says, sign me up. And that night I got the call after the first night, and she said, Denise, you haven't even talked mortgages yet, and you've already blown me away.
Wow.
And that's great, because now with a lot of people, we've been recognized, like I said, across Canada because of the way we do it. And we have so many mortgage brokers that we've been on podcasts with them because they recognize what we do, and we fit right in with the mortgage brokers because we understand the rules. Now, to be fair, we also were mortgage agents for about less than 2 years, and we gave up our license because of the rules that were changing, that were actually tying our hands even further by being licensed. So we had lawyers that said, Denise, why don't you go back and do it the way you did? And I go, that's right. So we work with a lot of lawyers. We have a roster of lawyers because I learned once, doing a mortgage, and I called my lawyer, I said, okay, we're doing a mortgage on this day. She says, I can't do it. I go, what do you mean you can't do it? She says, Denise, I've got like 13 closes, and I lost my law clerk. And I go, this will never happen again. So we have a roster of lawyers. So we need a lawyer for the lender, a lawyer for the borrower, and if one's not available, we call a different lawyer. So we have a roster of lawyers, so we always able to do our mortgage when we need it. So that's been a godsend.
So this is, if for the people that are watching or listening, this can come as a big surprise because we kind of transitioned into that conversation. But, every time I talk to, people out there, civilians,
called the mom and pop.
Yeah. They have no clue. I mean,
that's right.
The first thing that people think about is borrowing against your RRSPs. That's I can do that. I know how to invest with my RRSPs because you borrow. We're not talking about that at all. We're talking about using your registered funds as a vehicle to invest within the registered fund. You don't collapse the registered funds.
Right.
You're investing within those registered funds. Now, the question that I have is, why isn't this known, or why don't people talk about it? What's the big secret?
Oh,
Well,
my
the banks
gosh,
don't want us to know.
Yeah.
Because the banks don't make any money off private lending. The banks make money by selling you mutual funds, by selling you GICs. And so, for the most part, the banks don't offer this as an investment vehicle. You've got to go to a special trustee. CRA has a list of all the things that you're allowed to invest your registered funds in. And mortgage on Canadian property is one of those. Mm-hmm. But the banks don't make money off that, so they don't advertise it. So all that springtime advertising about come on down to the bank and put money into your RRSP, all they're interested in is getting the person's money into their mutual funds.
Well, most people, I would say, are using it as a way to pay less taxes. And they just don't really put too much focus there. They just put it, it's like set it and forget it kind of thing.
I was just about to say those words, set it and forget it, because that's what they do. And they wait 30 years and they expect this big pot of money at the end. That's what we were sold. We were sold a bill of goods. Because look at the seniors today. Do they have the money they expected out of the registered funds? It's just not
even
there.
close.
Not even close. You're absolutely right. So we make it our point, not just educating investors, like real estate investors, but we educate the mom and pop. And there's millions of people out there that have no clue that there's an alternative. So they need to be educated. So that's why we talk to people. That's why we do webinars. That's why, we educate them. They go, oh. And it's just so nice to see somebody where the light bulb goes on. They can say, I can make more than, and I'll tell you an example of a woman who had 60Ks in there, and after 1 year, she thought she had made 5%.
On a mutual fund.
On her mutual fund.
It's her own money. Her own.
Exactly.
This was her deposit into the RRSP with a bank or a financial institution. And she thought she was making 5% on the 60K that went in.
So as listeners, listen to this. She thought she made 5%. How much do you think you should show as 5% for that 60K? Right? Should be $3,000.
Yeah.
Do you know how much she had to show? $200.
Wow.
That's a 0.03% is what she made on her money. And she thought she made 5% because that's what the fund said. The fund did 5%. So when I talked to her, the first question I asked I said, is it the fund or is it you that did that? She says, well, I don't know. And that's how we got into the conversation. Yeah. So when people realize that there's alternatives, they're open to the idea of doing something else. And again, when you're doing a mortgage, secure it on property. It's done with lawyers. It's not a fly-by-night thing, right? So there are rules around it, and because we've worked with a regulatory body before, we're stickler to the rules. So that's what we do.
And I mean, the big thing is, as an investor, this is a great strategy because as most of us that have been involved in short-term ownership, whether you're buying it for a fix and flip, whether you're buying it for a BRRRR, you'll find that traditional financial institutions hate short-term mortgages. Mm-hmm. So if you go in and you say, oh, I'm going to be remortgaging in 10 months, the bank will turn you down.
Yeah.
So sometimes when you're doing a shorter term strategy, it's hard to find money. Well, there's all this sleeping money sitting in people's registered
How many
funds.
do you think? How much money do you
Well,
think?
there's over $3.8 trillion in registered funds. That's trillion with a T.
Wow.
And
And we're talking about Canada and Canada?
no, just Canada.
Just Canada. 'cause
Holy.
just Canada.
Guys, there's a pot of gold, and nobody's paying attention.
And so why do you think our course is called Access Unlimited Capital? Because it's out there. You just need know how to do it and do it well and do it right. Because, again, having to follow the rules. But yes, their money is still protected. It's still registered. When they get paid interest, it goes back into their registered account. So whether it's be RSP, TFSA, RIFs, RESPs, liras, you name it, all registered funds. Only the disability ones that they don't allow.
RESP?
RESP
Yes,
is
you can.
eligible,
Yeah.
depending on the trustee.
Yeah.
But again, it's a matter of finding a trustee that you can work with who is supportive. We've been lucky because we found one that we've worked with extensively for the last 15 years.
One, people don't know what a RIF is. RIF is when you start taking money out of your RSP.
Yeah, the
and this is when when you start taking money out of your RSP from your RIF. When your RSP converts into a RIF, this is when you get riffed off.
I love it.
That's my RSP humor, guys. What do you like? No, yeah.
I know.
And I mean, the big thing is that it's important to recognize that whether you're a borrower or a lender, there are rules around registered funds. And the simple reason for that, all right, here's where I make my admission, mea culpa. I did 31 years with the federal government. 5 of that was with that income tax department. So I understand a little bit about what goes on in the sausage factory. I understand a little bit about their thinking. And the bottom line is this. If you've got money in a registered fund that is either tax deferred or tax free, Canada Revenue Agency thinks that's their money until you've paid the income tax on it. So they put lots of rules around that.
Bastard.
And as long as you understand the rules, it's like playing a hockey game.
Yeah.
If you understand the rules, you can be like Wayne Gretzky. You can be really good at what you're doing. If you don't understand the rules and you show up to the hockey game in baseball cleats, then you're going to have a real problem. So it's a matter of just understanding the rules. That's one of the reasons why we had been doing this. We had been talking about our strategy, and people said to us, why don't you put together a course and teach others?
I love it. I love it.
And that's when we're doing mortgages, then you're using it as a debt instrument because you pay interest on it. And then the way it works really, really well is when you bring up the value of the property. If you're just buying a regular property and just want to get a mortgage and that's it,
Go to a
that
bank.
makes no sense.
Yeah.
Go to the bank for that,
Yeah,
right?
yeah.
But it's when you can bring up the value and then you refinance at that higher amount and you pull all that money out, pay off your investors, pay off the interest, and sometimes there's still money left for you in your pocket and you've got a new asset that is like a newer asset, either renovated or brand new in that. That's from the debt instrument. But as you know, recently what we did is that now all of these people, because we've had so many investors for the last 15 years using their registered funds, but now because we're doing developments, we want to be able to give an equity position now. And you can't do that just with RSPs and mortgages. You can't give, that's against the law to give an equity position.
Yeah.
So to do that and to be able to continue to use registered funds, we had to find a new legal structure to allow that, and that's when we created our mutual fund trust, which is called SDM Capital Trust, which is just another SDM company in our SDM group of companies that we have.
Well,
Those of you who haven't caught on, by the way, when we formed our first corporation, the lawyer said, I need a name. And we thought, well, DSMAC doesn't sound good. So we went SDMAC, Denise Stuart MacPherson.
So, but it's the SDMAC is Stuart Denise, because DSMAC does not. It didn't work for us. But so that's what we did now. So now we're able to give equity, and it's long-term growth because now we're dealing with development. So you're building brand new, so it's a longer-term thing. But then again, there's higher percentages being paid also when you're able to give equity, which again, as our investors, and the majority of our investors have already done 4 to 8 mortgages with us. So when we talk about being the trust factor and everything else, and we're proud to say that they've stayed with us, and when a project is finished, when's the next one, Denise? So they keep reinvesting their money with us, but now they're able to move that from a mortgage and put it into the trust, and again, now get it equity position.
Nice.
And that's
nice.
been really, really great. And that's recent enough. Like we
Yeah,
finished
yeah.
it in December. So
Well, the thing about I you know, we formed an MFT as well, and the amount of work. I mean, I you know, and I know you guys are relatively young, but you know, some people would be watching or listening, you know, and you know, without disclosing the age, you know, how are you stepping into this you know, era?
at the age we're at.
Yeah, you
just
know,
come out and ask. It doesn't bother me at
but
all.
what I'm saying is that's inspiring to me,
Yeah.
right? Because you guys are like moving and shaking and taking the world by storm, and you know you're still young people, but some people may be asking like, okay, do you like this is a big undertaking?
It is. And I mean, the one thing is that Denise and I started investing in real estate 15 years ago.
At retirement.
When we
and
retired
that's
from
what people
government.
don't recognize, right?
I mean, you can do the math yourself, you know, retired at 55.
7-0. That's where I am right now.
I don't want to say these things, you know what I mean? But
The bottom line is that our parents, we come from good genes.
We do.
My parents, both my mother and father, died at the age of 95.
wow,
Denise's mom was 95. Now, her dad died a little bit younger than that, but he was a professional painter, and he was working at a pulp and paper mill, painting the inside of the big tanks with spray paint. And they didn't wear respirators in those days.
So his lungs
he
got shot.
had
Yeah.
bad lungs. But our bottom line is that we figure that we've probably got another 25 years on the runway here. So making the effort to put in a mutual fund trust now doesn't scare us. We're going to be around for a while.
Nice.
But the nice thing is that it allows us to work for the people that we've been working for, to give them an opportunity to have their money earning better returns than they're going to get from the banks.
Well, I see myself going like, I don't see retirement is like what is that really?
Hey.
That's when you start dying.
We retired from government, not from life.
exactly. So you know you definitely have chosen something that you're passionate about.
Absolutely.
And more people should be inspired by that. Is
You know
just
what I
looking
say?
for your passion.
We're Zoomers, which is just boomers with a lot of zip. That's it.
And when people ask me about it, I say, listen, I would rather burn out than rust out.
Yeah, love it. So all your information is going to be shared in the show notes. And you know, first of all, thank you for coming and inspiring us. But I want to leave the audience with something inspirational. What's a mantra? What's a quote? What's something that you live by? We'll start with Denise.
Something that I've always lived by is feel the fear and do it anyways. And that I have lived by, let's just say, at one point in my life, and that's when I got divorced, there's a book by that name, right? And I remember reading it and I thought that finally told me what I had to do. And then everything else in my life has been that, because fear stops everyone. It does.
It paralyzes people.
Exactly, it does. So when you get that fear, it's like, and I've always been one, it's like, okay, just stand there like you're standing on the edge of a cliff, close your eyes and just jump. And to find out, you probably just jumped over a little speed bump. That's all it was. We make it such a big thing, but it's not. It really, it's all up here. So get that positive mindset going, feel the fear, just do it, and you'd be surprised on how ahead you get. And then again, we just want to be of service for people, and that's what we do. So, and I've told that feel the fear and do it anyways so many times to other people. And I remember one particular investor in Toronto at an event, and he kept coming month after month, and he still, after 2 years, had not bought a property. And I told him that story that I just did now about feel the fear, standing on the edge of the cliff, closing your eyes, just jumping. He came back the next month, and at the time was a RAIN meeting that I was attending, and he had bought 2 properties. And he says, wow, he says, that really hit home, Denise. And that's what I love, is when we can inspire people and they take action and they do something with it.
Just do it.
Yeah. Yeah.
I know that I, over my life, have met a lot of people who live with a lot of regret, and they spend a lot of time. And there was a line I heard once that I just embraced, which was, quit wasting time hoping for a better yesterday.
It's already done. You can't do anything.
Done.
Right.
And the one thing is, I mean, I've had some things that have happened in my life that I could spend a lot of time regretting, but I realized that all of the experiences that I've gone through have made me what I am today. It's important for me to take the most positive aspects of those and build a better future. And so that's my suggestion to people is quit wasting time hoping for a better yesterday. Focus on building a better tomorrow.
You heard it here, guys. These are, not only my personal friends, but I wanted to bring them on the show to inspire people. You guys are go-getters, and I know that there is no fear that you guys will that will make you stop, moving forward. So thank you for coming on the show, guys. That's the show. Alfonso loves you, and we'll see you all at the top.
And thanks a lot.
Woo!
The WealthGenius Expand Investor Conference is coming to the Lux Convention Center in Mississauga this October 31st through November 2nd, 2025, with over 50 speakers, 100 vendors, and over 1,000 in attendance. This is the premier real estate investor conference that you do not want to miss. Hosted by the godfather of real estate, Alfonso Cuadra, Expand Investor Conference, October 31st through November 2nd, 2025. Get your tickets at eventbrite.ca, and we'll see you at the top.